Hi, this is Darshan Bhatt from Glovista Investments with a market outlook for the week beginning August 23rd. This past week, the equity indices pulled back as the market's nervousness about the announcement of Fed tapering and fast approaching Jackson Hole Symposium combined with options-related hedging activity. From a market perspective, the S&P 500 index declined by 59 basis points for the week and the Nasdaq index by 29 basis points. The internals of the market were in line with the risk-off sentiment, with the small-cap Russell 2000 index declining by 2.5% and defensive sectors outperforming cyclical sectors. The US dollar moved higher by 1.06%, leading international equities and commodities-oriented equities to underperform. From a macroeconomic calendar perspective, this past week provided further evidence of an ongoing moderation in global economic growth activity momentum, as several releases from the top two nations of the world came out weaker than consensus expectations. Specifically, US July retail sales, Empire State Manufacturing, Philly Fed Index, as well as out of China, July retail sales, July industrial production, and fixed asset investments all came out weaker than expected. Despite such weaker than expected data out of US and China, we believe the outlook for the rest of 2021 and 2022 remains unchanged, as the ongoing moderation in Q3 global activity will be more than compensated by pickup in activity Q4 onwards. More specifically, we believe the announcement of booster shots for the US population, the upcoming large infrastructure spending, and exceedingly loose conditions provide a robust outlook for US growth activity. On the Chinese economy front, the ongoing surge in virus cases and the accompanying slowdown in demand conditions is likely to be met by a government-engineered loosening of financial conditions. From a market perspective, we continue to like equities and asset class, recognizing the fact that we are entering seasonally a period which is challenging for global equities. Within equities, we continue to like value and cyclical-oriented sectors, including US industrials, financials, materials, emerging market equities, and select US large-cap tech stocks. From a macroeconomic calendar perspective, this coming week, we shall see the release of August PMI from US, Japan, UK, Germany, and France. In addition, this week, we shall see the release of US July durable goods orders, as well as July personal income and spending data out of the US. Internationally, some of the important releases this week include July Japan retail sales, German IFO business expectations, and French business confidence indicators. We wish you a wonderful week, and thank you for listening.